Hello and welcome to Wall Street Wisdom. If you're an investor or just someone who wants to protect their money, this is a video you absolutely cannot afford to miss. Right now, there's a lot of noise in the markets, a lot of uncertainty, and a lot of signs that something big could be coming. Some are saying we're heading straight into another 2008-style crash. Others believe this is just market fear and that things will recover. But what's the truth? What do numbers actually say? And more importantly, how can you prepare for whatever comes next? Today, we're breaking down the real warning signs of a potential stock market crash, what history tells us, and what smart investors are doing right now to protect themselves. By the end of this video, you'll have a clearer picture of what's happening and a strategy you can actually use to keep your money safe and even profit during uncertain times. Let's get started. First, let's talk about the biggest red flags in the market right now. There are some serious warning signs that most people either aren't paying attention to or don't fully understand. But if you've been watching closely, you'll notice that things are starting to line up in a way that's eerily similar to what happened before major financial collapses in the past. One of the biggest indicators, interest rates. The Federal Reserve has been aggressively raising rates to fight inflation, and that's putting massive pressure on businesses and consumers. Every time rates rise, debt becomes more expensive, which means companies that have been thriving on borrowed money are suddenly struggling to stay afloat. It's not just small businesses. Huge corporations are laying off thousands of employees to cut costs. Tech giants, retail chains, even banks have been cutting jobs left and right. That is never a good sign. Now let's look at consumer spending. The reality is people are tapped out. Credit card debt is at an all-time high, savings accounts have been drained, and wages are not keeping up with inflation. When people stop spending, businesses suffer. When businesses suffer, earnings drop. And when earnings drop, the stock market follows. And speaking of earnings, let's talk about what's happening in the markets right now. In the past few months, we've seen record highs in stocks like Nvidia, Tesla, even the S&P 500. But let's be real, does this really feel like a booming economy? Or does it feel more like a bubble waiting to pop? The last time we saw this kind of wild overvaluation, it didn't end well. Stocks were skyrocketing in the early 2000s, right before the dot-com bubble burst. Same thing happened in 2007 before the financial crisis hit. And now, valuations are stretched, companies are loaded with debt, and retail investors are FOMO buying into stocks at all-time highs, believing the rally will never end. But here's what the smart money is doing. The billionaires, the hedge funds, the institutional investors, they're not buying. They're selling. They're quietly moving their money into safer assets like gold, treasury bonds, and even cash. This is exactly what happened before the last major crashes. They get out early while the average investor is still piling in, thinking everything is fine. Now you might be thinking, all right, this sounds scary, but is a crash guaranteed? And the answer is no, nothing is ever guaranteed in the stock market. But history does leave clues, and when we see similar patterns happening again and again, it would be a mistake to ignore them. So what should you do? How can you protect yourself? Let's go over a few key strategies. Number one, don't panic, but also don't be blind. It's easy to get caught up in the market hype, but the best investors always keep their emotions in check. That means sticking to a strategy that's built to last through all market conditions, not just blindly following trends. Number two, diversify your portfolio. If all your money is tied up in overvalued tech stocks, you could be in for a rough ride if a crash happens. Instead, consider spreading your investments across different sectors, including defensive stocks, commodities like gold, and even cash reserves to take advantage of buying opportunities later. Number three, focus on quality. Not all stocks will crash the same way. Strong, profitable companies with solid balance sheets will always survive, even in tough times. Look for businesses that have low debt, consistent cash flow, and real long-term value, not just hype. Number four, be patient and have cash ready. If a crash happens, that's not the time to panic sell. It's the time to buy. Some of the best investment opportunities come when the market is in free fall and everyone else is scared. Warren Buffett famously says, "Be fearful when others are greedy and greedy when others are fearful." If you have cash ready when everyone else is running for the exits, you'll be able to scoop up quality stocks at massive discounts. And finally, number five, keep learning and stay ahead of the market. The more you understand market cycles, the less likely you are to make emotion-driven decisions. If you're watching this video, you're already ahead of most people. Keep educating yourself, keep researching, and don't rely on the news to tell you what's happening. By the time the media is reporting a crash, the smart money has already made their move. So let me ask you, what do you think? Are we heading for another crash, or is this just another market correction before another bull run? Drop your thoughts in the comments below because I'd love to hear your take on this. And if you got value from this video, make sure to hit that like button and subscribe to Wall Street Wisdom so you don't miss out on future insights. We break down complex financial topics and help you make smarter money moves. That's it for today. Stay smart, stay informed, and I'll see you in the next one.